this is the narrative right now, is that the dollar's going down, Europe's going up, so that's the end of U.S. exceptionalism. Be really careful with that commentary. Let's talk a little bit about what you need to know before the bell. Let's talk a little bit about what's driving this idea that, you know, Europe is going to be the place that you want to put capital, et cetera. And that's the place right now at the moment. And that's because the dollar's been under a tremendous amount of pressure. And, you know, again, when the dollar falls, right, everything is, again, let's go back to our basic analysis that everything that we deal with in the world is based on supply and demand. So that's based on currency trade as well. So if the dollar falls in value, that means that if I'm storing reserves or whatever it is in the US, well, now I'm losing the value of my stored reserves. So I'm going to move that money back into my own currency because it's better for me to do that. And that also gives me more buying power because I've got a higher currency than what I'm competing against. So if I'm buying stuff in the dollar, anything that if I'm in Europe and I'm buying stuff in dollar values, I'm getting a better buy with it because my currency is stronger than the US dollar right now. That's just the way the world works. So you're going to see capital flows into, as I pull money out of the US reserve currency, right? So my US reserves, I'm pulling that out of stocks, I'm pulling it out of other assets, moving it back into to my currency. That's going to increase my market value, and that's going to put pressure on the US dollar. So it's exactly what we're seeing. So as the dollar weakens, things that are balanced that way improve in price. So we see this decline in the dollar, and that's why we've seen a relative increase in emerging markets because of that decline in the dollar. We've seen the same thing in international stocks because of the decline in the dollar. But be careful with this idea. So this is the narrative right now, is that the dollar's going down, Europe's going up, so that's the end of U.S. exceptionalism. Be really careful with that commentary, because here's a longer-term look at emerging markets. Here's the all-time high back here with emerging markets. It's just now breaking out to an all-time high. Here is emerging markets. So in other words, that's 5 years of barely making any money. Same thing with emerging markets. Here's your all-time high in 2022 or 2020. Here's where you are now, still underwater. So this whole idea that the end of U.S. exceptionalism is occurring when you're starting to look at, if you just own the S&P index, you have made dramatically more money. Your money has been treated much better in the U.S. than other parts of the world. And remember that markets are ultimately driven by economic growth. And if you take a look at where economic growth is going to occur in the future, it's not in Europe. It's not in emerging markets. Yes, they will benefit from a stronger U.S. economy, which will come, but that's not the place that necessarily you're going to have this exceptional growth rates, right? The exceptionalism moving to Europe. Europe is not in a position, economic growth-wise, debt-wise, et cetera, to create, demographic-wise, to create that economic excellence that is going to just remove everything from the U.S., this end of U.S. exceptionalism. So again, what's going to be driving the future of the U.S. economy is all the technological development that we're going into, artificial intelligence, infrastructure, power, utilities, all these type of things that we're talking about now is going to create faster rates of economic growth in the future. And that's going to start to bring back dollars into the U.S. So this is a long-term chart of the dollar. So here's the decline in the dollar that we're talking about right now, the end of U.S. exceptionalism. Apparently the dollar is absolutely crashing, but just remember that we had the same type of decline previously, and it was like that was the bottom, and then we had this very sharp rally in the dollar. Long-term, over the last 10 years, the dollar is actually higher than it was 10 years ago. So again, you know, be careful. The whole point is, be careful with narratives, and particularly when you're investing. Yes, right now, the international markets are performing a bit better than the U.S. That's okay. That happens from time to time. But be careful with this narrative that that's where you want to have all of your capital. The economic growth, the valuations that support that economic growth simply aren't going to be that beneficial long term for international and emerging market stocks relative to the U.S., which is where your capital would be made. Anyway, that's what you need to know before the bell this morning.